Hey, folks, special treat for you here today. Laurie May Peroff is our special guest. And my God, this lady is doing and has done a lot when it comes to real estate investing, when it comes to raising capital, when it comes to coaching and other people, helping other people get into real estate investing. She does a lot.
There are millions of real estate investors out there, and most are stuck with just a couple of properties. They want financial freedom, but their small portfolio ends up costing them more in time, effort, and money than it's worth. Getting out of the rat race seems harder than ever. This show will help you do more deals, better deals, and bigger deals. Finally, you'll be able to reach your income and lifestyle goals. How? By attracting and leveraging private money partners and their capital. Now get ready to raise more money, because here's your host, Dave Dubeau.
So, zooming in from somewhere around beautiful Edmonton, Alberta today, we've got Laurie May Peroff. Welcome to the show. Great to see you.
Well, thank you so much for inviting me, Dave. It's a pleasure to be here.
So let's just start quickly, 30,000 foot overview. When, why, and how did you get going with real estate investing?
2011. Why? Because my father had passed away and left an inheritance. And I was burning through it, as many people who have newfound money do. And I thought I needed to purchase something to have a little legacy, some sort of safety net that could represent my dad and his gift to us.
Just out of curiosity, what was that first purchase that you did with the inheritance?
Well, I was kind of afraid to be a landlord, so I bought a pre-construction condo that was being built 1 block away from me that I could see from the window of the condo I was living in. So I sat there and watched them build it every day.
Watch it going up day by day.
Yep. Awesome. Your coffee break's been too long, buddy. Get back to work.
All right. Well, you didn't stick to it pre-construction condos for very long. Where did the journey take you? And first, so you kind of had the idea. You got this pot of money that you were burning through. You wanted to put it to good use, create a legacy, kind of put it to work the way you think your dad probably wanted you to. Mm-hmm. So you got started with the pre-construction condo. Then what? Did you start doing different things? You start getting educated about real estate investing. What did your journey look like?
Yeah, it was 3 condos in, including the one I was living in, when we stumbled across I'm not sure if I can say the name, network group, Keyspire Network Group. My husband saw Scott McGilvery was coming to Edmonton to do a show. Mm-hmm. And he told me I should go see them. I said, there's really no reason to do that. We already have 3 properties. That's all the bank is going to let us have. So there's nothing more we can do with real estate. And he said, well, I think Scott may have gotten more than 3. Why don't you go to the show and ask him how he did it? So I did.
There you go. So that got you started. And then where did things go from there? What kind of deals did you start focusing on after that, Laurie May?
Well, I kind of enjoyed that income property show, and Scott can renovate a basement suite in 20 minutes. So I figured I could probably do one in 4 months. So I bought a property in Edmonton that needed a basement suite, and all excited, set myself up for 4 months, and I thought it should cost about $60,000. 16 months and $125,000 later, we had a basement suite, a little bit renovated upstairs as well. So I thought, well,
and a lot of learning,
a lot of learning.
Yeah.
So I said to myself, that's a lot of money, but the only reason why you blew everything so bad is because it was a learning curve. So you should do it again and see if you could do a little bit better. So I refinanced 2 of the condos we owned and used the line of credit from this property that we just renovated to purchase another property that needed a basement suite. Got busy on my 6-month renovation schedule and my $85,000 budget. And $125,000 later and 12 months, I said, I need some help with this. I'm not very good at budgets or schedules. I'm going to need somebody who's got a little bit better talent in this area than I do. So I started partnering with people who did have some track record and some experience. And I still run that business today. It's Sweet Sweet Home Builds, and I partner with builders, renovators, flippers, and developers across Canada. I provide the equity and a little bit of guidance, and they sometimes stick to the schedule. They always stick to the budget because they contractually have to.
So there you go. So you become a money partner on these kind of deals, basically.
Yeah, you know what, though, Dave? I still really enjoy doing it myself. And from helping with other people and learning some tricks to the trades, I am better now with a budget and a schedule. So I do my own too, but that's a different business. But that's how I got started with Sweet Deals and Sweet Sweet Home Builds, was because I couldn't do it. I tried.
Yeah. Well, I'm curious, Laurie May, before you got into real estate, what was your background? What were you doing professionally?
Oh, I taught Microsoft Office Suite to college students who didn't think they needed to learn Microsoft Office Suite. Turns out that's really transferable with tenants that don't think they need to pay rent. Same skills.
Yeah. All right. Very good. Well, there are a lot of transferable skills from one thing to the other there. That's for sure. So you started off with the condos, you got into the, putting in basement suites, duplex conversions, whatever we want to call that. You figured out you weren't great at it with your first couple. You partnered up with people, created a business out of that. So that's one part of your real estate investing empire, so to speak, there, Laurie May. So what else do you do? Because you do a bunch of stuff.
Well, it turns out that when you partner with flippers, they like flipping. At least most of them do. Yeah. Somewhere around the third house, though, they start to get delusions of, well, I'd rather not work with somebody else's problems. Maybe we could build a house. So we'll do some infill builds. We'll just tear it down and start from scratch. It'll be easier and a better deal. I don't think they do more than one, possibly two infill builds when they go, I can do one, I can do 44. So another area of business that I got into was land development, working as the capital raise and investor relations partner for larger land development projects. I'm doing one in Souk right now. So that's where the 44 lots came in. That business is going very well. Sweet Oasis Homes. Got into doing some vacation properties with another partner, Sweet Sweet Retreats. What else did we get into?
I'm hearing a sweet theme going on there.
Sweet Sweet Home was the first company that started. That was the condo rentals. Then Sweet Inspiration is multifamily, so into multifamily properties now with JV partners or with corporate partners. So lots of different directions.
And then tell me about your meetup, because that caught my eye from a marketing standpoint. Well, a lot of what you do catches my eye. It's beautiful. This one really caught my eye. Tell me a little bit about your real estate meetup and why you got that started.
So a question was raised by a colleague of mine that her neighbor thought that all this real estate investing that they were doing was just fascinating. But, she's over 50 now, so she couldn't start anything like that. It was too late for me, but good for the other young folks. So my colleague said, how do you combat that sort of stupidity, for lack of a better word? And from that, the Silver Hair Investor Team was born. We're specifically designed to address the needs of real estate investors 50 years of age or older. So we may not have as much runway as some of our younger colleagues might have. Most of us might have a little bit more money and potentially some more time, depending on which side of the retirement journey you are on.
Maybe a little bit of more life experience too.
Perhaps, yeah. Most of us have some desire to leave a legacy, either to children or to favorite nieces, nephews, charities, all
Yeah.
that sort of stuff that we want to do. And we need to figure out how to stop being savers 100% of the time and start living off some of the savings that we've accumulated. So
Yeah.
how do we transition from always putting it away and start taking it out without fearing that we're going to lose it all?
So what are you showing people 50 plus? Are you showing them how to become active real estate investors? Are you getting them involved as passive investors in other people's deals, or both? Or what does it got to look like, Laurie May?
Yeah, so we do a 45-minute off the top educational segment, about 20 minutes of chit chat of actually talk your shit, to learn your shit. And then we have
silver haired investor training, the acronym.
We're shit.
You're the shit. Nice. I like
I'm the shithead. Along with the other colleague that I mentioned before, her name's Rochelle. You have to have a questionable sense of humor and be over 50 to join. So we do a little training segment. Our training spans everything because we have some very active investors. We also have some that are going, what the hell are you doing? I just want to lay on the beach and write a check. Yeah. We have some that are very concerned about certain specific causes. So we try to be holistic. A lot want lifestyle investments right now. So we try to be holistic in our approach to the education. Following the education, we have a share your shit segment where you can pitch your deal to fellow investors, or tell me about an app or a book that you've read that's really helped reset your mindset and get you motivated and excited again. And then our last segment is called Get Shit Done. And we break out into little breakout rooms, exchange information, and set our goals for the upcoming month. Then we call each other out on it. You better do what you said you were going to do.
No, that's very cool. So I'm assuming, I could be wrong, that this is an online forum, a Zoom type get together, or is it in person?
Yeah, no, we're Zoom across Canada, and we have about 450 members now, I think.
That is wonderful. Yeah. That is fantastic. I absolutely love it. Laurie May, you
got to get you signed up.
There you go. Yeah, I definitely qualify in all respects. Questionable humor. I've been called a shithead many, many times, but not in this context. And
That's a good thing.
Definitely over 50. So what I was going to ask is, it sounds like you got the whole raising capital thing pretty dialed in. When did that start for you in the first place? So, I mean, you inherited some money from your dad that got you into your first deal or two or three. Then you started scaling, and it sounds like fairly early on you started using OPM, other people's money besides the banks, to do more and bigger deals. So how did that start for you, and what have been some of your big lessons or takeaways in your capital raising journey?
So I started back in 2017 when I was doing the partnering with builders and flippers. We were, you offer money to somebody and partner up with them. It's not too long before they have more projects than you have capacity or desire to fund.
Right.
So I brought it out to my membership, to my network, and said that I was willing to borrow money. Pay interest, monthly interest. I'm not on the title of the projects that we're on. I partner with these people with JV agreements. So my borrowing through that company is all on promissory note, which has its own risks. It's a high risk loan since you're not on title for anything. But because of that, we pay a slightly higher than average interest rate. And so far it's been going pretty good. Never missed an interest payment. Pay everybody back when they want to be paid back. That said, I've had to ask for an extension now and again when projects go different lengths than expected, but on the whole, nobody's outstanding any capital, so we're doing pretty good. I'm enjoying it.
That's awesome. Do you mind if I ask you a few questions around that, Laurie May? Because a lot of people are kind of okay. So you're borrowing money from people using promissory notes, and then you're using that capital for the renovation projects or the building, kind of whatever needs it. Typically shorter term type projects. Did you set up a separate company for that? Is there, as far as securities and whatnot goes, did you have to get licensing or become a mortgage broker or anything like that to stay compliant?
Yeah, so we limit the amount of borrowing that we do. We're working on smaller projects, one-offs here and there. Sweet deals are 1-year term, and I pay a set rate of interest. You are lending the funds to the corporation, Sweet Home Builds, not to the project. So it can be used for anything within the corporate discretion.
Very good. All right. So bottom line is the people that are investing with you definitely know you, like you, and trust you a lot with their money because, like you're very transparent about, it's not a secured investment.
Correct. They sign off that they acknowledge that they're aware this is high risk.
Exactly. That's really important. So nobody's got the wool pulled over their eyes. I guess my question for you, my question for you is, what have you found has worked best for you, even starting back in the day, for getting people on board as investors?
I take a rather holistic approach, so I'm not sure what portion of it works best.
Okay. You do a whole bunch of different stuff, and it all kind of synergetically works. So what are the?
What I don't do well is follow up.
What's that?
What I don't do well is follow up. So if I have a weakness that I have to work on in my capital game, that would be it. But I provide information through various formats, a lot through my Facebook page. I hold discovery call meetings where we can talk about anything related to real estate, my investments, yes, but anything you want about real estate for 30 minutes. I attend all the meetup groups and investor summits and stuff like that I can get to. And just a lot of meetings, a lot of just being available to help people. I think that adds to the know, like, and trust factor. That's not why I do it, though. I do it because I love it. And I love this real estate stuff. I think like you do too. You just want to talk about it.
Yeah, no, that is wonderful. I love it. Well, thanks for sharing how you've structured things and how you do things. And it sounds like, well, you're definitely a high personality kind of person. So I can see you just kind of naturally attracting people. You're not shy. You've got a sharp marketing mind. I love all the, I love the names of your companies. I love the name of your SHIT group. Everything is very,
you can
very,
say it.
very well. Well, I said SHIT because I forgot what a silver-haired investor training group. Yeah.
Yeah.
No, that is fantastic. So what would you, when it comes to the capital side of things, so you're raising capital that way. Are you bringing on joint venture partners as well for any specific type deals? And now that you're getting into multifamily, are you starting to syndicate as well?
So I do have a fund called More Doors Capital Corporation. It's a mortgage investment corporation. So I've been doing private lending since 2014. Really, really, really enjoy it. I control our self-directed funds, both myself and my husband's. And now having this mortgage investment corporation, I'm able to put out mortgages across Canada as well, raising capital from shareholders that become preferred shareholders in the class that best suits their risk profile. That's my lower risk investment stuff as opposed to sweet deals. And yes, now in addition, I've gotten into multifamily. So yes, I'm bringing in joint venture partners isn't really what I'd say. Generally, when you're buying a larger multifamily, you strike a corporation. So we come in as shareholders and directors of the corporation.
Yeah, or limited partners, depending on that sort of thing. Yeah. Okay, very, very cool. So your MIC, that's interesting. When did you start that? And maybe give people the big picture overview of what a MIC looks like, what it means, how it works.
A MIC is kind of like a private lender's bank.
Yeah.
for lack of better terminology. So investors come in, they buy shares in whichever share class suits their lending profile. Each share class has very strict criteria about the sorts of mortgages that it will consider lending on. We put out the mortgages to mainly to investors who pay interest on that mortgage. The mortgage interest money comes back into the share pool and gets distributed back to the shareholders that hold the shares in that pool. Mm-hmm. What I really liked about it and what attracted me to the MIC was in order to maintain MIC status, you cannot keep any profit in the MIC. 100% of profits must be distributed back to the shareholders.
Very cool.
So that to me was a very, very, very interesting asset class. So the first question I normally get asked after that then is, if 100% of the profit is going back to the shareholders, how do you get paid? So Mama gets paid by running the management company that manages the mortgages. So shareholders don't have to pay me. The borrowers pay me when they pay the lender's fee. So share
they're paying points, or they're paying a fee to get the mortgage.
Exactly. Yeah.
Very, very cool.
So
very
I get
cool.
the fees, the investors get the interest.
Nice. And a lot of people have heard of MICs. They kind of thought about it. It seemed to me like this was something that only mortgage brokers could do. Is that true, or is that false? Are you a mortgage broker as well, or you just own your own MIC?
Correct.
Okay. Is it a complicated, expensive thing to get set up in your experience?
Oh, Jesus, yes.
I thought so.
My God.
Yeah.
And one thing I do caution you, if you ever look into setting one up, a lawyer's going to tell you how much it costs to set up a MIC. What they mean is how much their bill is going to be. It's double, because you also have accounting bills and other specialized legal advice that you need. So when they tell you it's going to be 80, double it.
Yeah. It's an expensive proposition. So for the MIC, kind of what amount of capital do you have to have in it for it really to make sense financially to start up your own MIC?
I wouldn't even consider doing a MIC if you have less than 5 million for your projects that you're dealing with. Mm-hmm. You don't really start to make money, break even and make money until you're hitting the 10 million mark, somewhere between 8 and 10 million.
Did you know that going in?
Oh, hell no. Nope. So I knew is I couldn't do the syndicated mortgage that I wanted to do for the land development deal I had. So at the time I had 76 investors lined up to do a land development deal. I went to probably 10 private lending lawyers to do a syndicated mortgage. All happy to see me. Come on in, Laurie May. So excited to get some sweet business. Have a seat and let's talk about this. I pull out my 76 files and they say, I'm so sorry. I forgot I had another meeting. You just run along now. They could not slam the door in my face fast.
Wow.
So the only choice I had was to start a MIC. I didn't even know what a MIC was. My lawyer came to me, told me this is what we have to do. In that room at that time, we had him. I figure it was about $2,500 an hour of faces in the Zoom circle. So I went around the circle and asked everybody if they knew what they had to do for the next steps in order to get this MIC done and get it out there and get us up and operating. And this is our timeline. Can you do it in the timeline? Yes, 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 yes. Got back up to the top to the main lawyer that presented it. Everybody else had laughed and said, what the F is a MIC? What am I buying?
Yeah. So when was that, Laurie May? When did you set that up?
We bought the property in 2020, so it would have been December 2020. No, October to December 2020.
All right. So knowing what you know now, would you do that again, or what would you do differently?
I would have done an MFT. An MFT would allow me greater flexibility for bringing in other new land development projects. This MIC was more designed to be a mortgage investment corporation to do mortgages. I still like that. I'm still happy that I did it. But if I had my hat on right for the land development project, I would have used an MFT, not a MIC.
What does MFT mean?
Mutual fund trust.
Okay. Yeah. Yeah.
So mutual fund trust, the thing that scares most people about that one is you have to have 150 unique investors at all times, or it collapses and you have to return all the money, which when it's registered money in a land development project can be a little challenging, but the 150 unique investors doesn't scare me anymore.
Yeah. Very, very good. Laurie May, this has been fascinating. I want to thank you very much for joining me on the show and sharing some of your insights and some of your experience. Has been absolutely wonderful. If people want to find out more about you and all things Laurie May, where should they go?
Well, let's make it easy. How about lauriemay.ca?
That's pretty easy.
Yeah.
Awesome. All right, Laurie May. Well, thank you so much. This has been great. And everybody, reach out to Laurie May if anything she's been talking about makes sense to you. She's a very, very open person and very, very interested in helping other real estate investors on their path. So take care, and we will talk to you on the next episode. This episode is brought to you by moneypartnerformula.com. Our Money Partner Formula service allows you to raise all the private capital you need to do all the deals you want while we handle the hard stuff. We offer reliable and affordable done-for-you marketing services that get you investor meetings booked without all the work. So go ahead and check out the website right now, and then feel free to schedule a call with me, and let's take your portfolio to the next level. Again, that's moneypartnerformula.com. Watch investor meetings pop up in your calendar. We handle the rest.